following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show from sunny North Carolina, where it's in the 20s here. And I am cold, so that's why you'll see me with the hat, trying to keep my my somewhat vacated area up top warm this morning. It is it was snowing here yesterday, which I could not believe completely. So if you guys have gotten snow already, that's great. This is the first time here, which everybody's going crazy, going to the grocery store buying bread and milk, and it's funny to watch that happen. It's hilarious. When I lived in Chicago, you know, I remember it was so. You guys living up north, I don't even. Living in Chicago relative to Boston is probably not cold at all. But I remember one time I went out to rode the bus downtown to the Board of Trade from Lincoln Park. I used to live there when I was younger, which was a really cool place to live. I had like a square inch uncovered on my face. I mean, I had everything covered, and the wind was blowing 40 miles an hour, and it was like zero. And I think I got frostbite on the square inch that I had uncovered. It's an amazingly cold place at times, and the wind was incredible in that town. We've obviously had a big day yesterday, and we're kind of, you know, keeping our head up a little bit here this morning, so to speak. I'm looking at gold first. And, you know, we talked about this 1060 area. We've had a new profile appear and lock in on our daily next time frame down. I'm still not a huge fan of buying gold. I mean, it's acting extremely supportive here, but you know, we talked yesterday about this 1089, 1090 area. I'm still thinking that's our big area to hit on the short side, believe it or not. But we've had a new profile attempt to appear yesterday. That means it's pretty much okay to be long now on the intermediate, and not okay to be short until we get up into those major inflection points, which line up around 1089, 1090. All right, so 1077 again. That's the top of our current profile. I'm not a big fan of the market completely imploding, stock market that is. I think this is a little bit of a sympathy bounce here. Gold, in my opinion, should be acting much stronger, and it's not. And we talked about that situation with the notes and the bonds yesterday. I mean, they barely just poked their head up and got back into an intermediate balanced area, which I'm showing you right now. This should have been much more of a violent reaction, in my opinion. We're going to, and by the way, our scanner, as you can see, we've got our charts off. I promise this. I know it sounds like a broken record here, but we're loading everything right now. Again, testing. We should be able to get a version of an upgrade out today, which you guys will have all that, and then I can roll out the videos after that, because they're predicated based on looking at only things within the scanner, and that includes the charts. So I didn't want people to have to go to another program like eSignal or what have you, NinjaTrader, TradeStation, Thinkorswim, on down the line, to be able to use this thing. So that's kind of what that's about, and that's where we're at right now. So going back to our charts, we're just going to focus on our usual suspects right now, and hit some stocks in a little bit. Excuse me, guys. I apologize. So the notes and bonds not exactly acting like the world's coming to an end here, and that relativity kind of look around is something. You know, you try to put the pieces together to look at the S&Ps and you know, where's the leverage with these things. We talked yesterday, and I'm just going to review exactly what we talked about. And I'm going to get it back to my 240 here. When we were continuing to kind of spiral down yesterday morning in the opening, we were down about 300 Dow points. We talked about, not a huge fan of selling a down opening like this. Let's wait until we get back above this 1994 into 2002. Well, that kind of happened. End of the day, we had a lurch forward to about 2017, and now we're kind of pulling back to, guess what, this morning? The low's 1992. So that 1993 rounded off to 1994, 1992. You got back in the neighborhood. You're looking at that as support off of this daily unfair low. And I know that we talk about the breadth numbers all the time. And Tucker in particular has really lended some really good credence to, what's going on these exhaustion situations. And I think, we actually got into the 90% exhaustion area. We're going to talk about this when we come back, guys. I hear the music. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Welcome, ladies and gentlemen, and kids. If kids are watching, actually, if you are aware of a kid watching this show, just find him and get him away from this show. It's not a kiddie show. through the nation of social justice and keep the kids away from this show. Just kidding. Here we go. All right, so what we were doing is looking at the S&Ps. We're trying to finish up, and I apologize. We've got new times on TFNN. I don't have a clock for that yet, but I will get one from TFNN today to keep me alerted of when these breaks are coming up, and again, that's my fault. So here we go. The S&Ps, we were talking about, some of the breadth calculations and looking at some of these major inflection points. And yesterday, in fact, we were talking, just to review this again, we were talking about, not selling it down, opening like that. Let's get back above, at least into and back above that DMZ we talked about yesterday, the 1994 into 2000 general neighborhood. And what was that? That was our daily unfair low, kind of mapped with this, top of the hill. Remember, in these profiles, these POCs on relatively wide profiles, and I'm going to call this a relatively wide profile, is the definition of this is the mode of the profile. So what does that mean? That means it's the most well-traveled volume print within this balanced area. So that's kind of the peak of distribution for the most. In statistical analysis, you've got that the mean is the peak of distribution. We call this the point of control, and this is the mode. And if you just look up the mode on the internet and get a definition for it, it's a very simple math print that if you want to look at the implicit definition of that. And Al's saying there are some kids watching this show, and you need to get them away from this show. Here we go. So as we look at that, what do we do now? So this morning, we've come down, we always talk about the retracement back into these inflection points. We got to close yesterday, again, above here. And I've not been a big fan of getting super short down here. And we came back and retested this 1994. So we could have imploded again. There's no doubt about that. But, we talked about taking shots around these DMZs and getting back above. So, how did the breadth show some guidance on this? Well, Tucker had stated recently in particular that, and he just threw some numbers out in the den, we got pretty whacked out here on the 60 and the 240. About the same time, we were traversing this morning and yesterday below some of those DMZ numbers that we talked about. So, do you have a lot of leverage, statistically speaking, with that type of overextension? No, you don't. So we had talked about some thresholds recently, and this is something I'm going over in the videos. But again, I wanted these charts finished and done here, which are, again, still doing a little testing. We don't want things crashing on you. Whenever you add new features in software, by the way, you make a procedure over here, and a lot of times it'll affect something over here, and you got to do bug fixes. And this was a little bit more of a lengthy process than we thought. So just, trying to get that right for you before we roll this out. So, and if I say that again, slap me. I've said it about 10 times today already. Here we go. So as we look at some of these overextensions, and we also look at this, we don't talk about this enough, really. This area right in here, this yellow that you see on our odometer, this got really, really super populated at the same time all this was going on. So, is it wise to sell this below? I mean, let me go back to our charts here. Is it wise, with all things considered that we just talked about, to start looking at selling retracements back up into this 1994 area? Because we came back, we came below, and then we obviously had to retrace back up into this area, and that's the leverage is not there. So, we got to close back into balance here. We came back and retested. And to be honest with you, you look around the globe, some of the instruments combined with what we're talking about right now, the notes, the bonds, the golds, the dollar. I mean, the dollar's just completely got on the launching pad again. So, we talked about basing off this 98.30, and this has been a really, really nice move here. And the U.S. stock market likes strong dollar, and they like low rates. And, again, China kind of came in and did some, as we talked about yesterday, they can do anything. They came in and pulled some innovative measures or whatever. I don't exactly know the details of that, but the government stepped in. And we're still sitting in a general support area, to be honest with you, on the long term. And this is, again, something that may continue to have more government intervention. And, again, going back to the S&Ps, what does this all mean? In my opinion, you've again got a DMZ down here right now, 1994 and a 2000, that you can pay attention to looking at maybe some short-term breadth changes here. And you've got a base happening on one of our time frames relatively well. I'm going to pull this up. 21% of the stocks in the S&P 500 are forming new 240-minute profiles or demand areas down below. So again, is the edge here to get short in a big way right now? Probably not. I mean, I know some of the hosts on TFNN have been talking about and beating the desk on the short side, and they've obviously had some really good moves down here lately. But, what do you do now? Again, I think you can orient some stops below 1994, and maybe we'll get a move up to 2025. That's our targets here initially on our S&P moves. Okay, so you've got a decent risk reward right now, in my opinion, on the S&Ps actually going long. And going back to the dollar really quick, and let me see where our times are here. Okay, going back to the dollar, what do you do with this now? I think you've actually, on a relatively wide profile, you've met some initial targets here around our top of the mountain. It's going to be tough. It's going to be tough to get through this with no resistance whatsoever. So that top of the mountain is 99.37. We're trading about 99.43 right now. So we've kind of edged up, reached high 99.49. So this is going to be a little bit of a lid right now. And remember, if you don't watch this show a lot, we take long-term time frames, take precedence over shorter terms. And even though the dollar, it looks like it's kind of eclipsed its recent highs back on 12/17, we're not exactly blowing the doors off here, stopping people out, and we've also got that POC on the weekly to pay attention to. So that's where we're at with the dollar. A little bit about gold. The S&Ps, obviously, is Shanghai we talked about. We looked at the notes, and we're going to hit crude oil really quick. Now, this was another indicator, if you will, especially off of the Saudi situation yesterday. We're going to hit this a little bit more on crude oil when we come back, and we're definitely going to talk about some stocks that showed their self yesterday.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Before we get into Apple, I just want to point out SWN. This is one we talked about the other day and was kind of breaking stride. It actually eclipsed an entire profile in 1 week. Never really, I mean, it showed some orange situation down here. That was kind of a takeout profit situation on the short side on the SWN, but we pulled it up, and it was one of the stocks that was showing itself on the ETF, the XLE, and in a very ugly situation. This one kind of was at the top of a profile, and we were saying, okay, well, probably the risk is to get short this right now. Let's just wait and see if it pops up. And SWN is really, man, I mean, I think we were talking about it around breakout around 592, 771. It came back and retraced off of the top of a profile there. We always talk about, just like we looked at, just like we look at everything basically, that really high probability trade is like you kind of get a move up, then you either consolidate around those inflection points, or you come back and retrace into that area from the breakout. And a lot of times buying these breakouts on huge days, a lot of times you'll get a retracement back into some kind of inflection point that the profiles will kind of predicate out for you, or output out for you, excuse me. So just wanted to put that on the radar screen. If we go into, we were going to talk about Apple and crude oil. I'll go back to that in general. But if we go into our, let's just go into our ETF section here, and let's go into the XLE. This is our weekly. And we've also got breadths on these ETFs up here. So these are kind of cool. And this is what going back to our ETF section, this is our daily. That's our weekly. This is our daily. This is this XLY situation. Now, that Bloomberg brief that I did, this was really showing itself breadth-wise. And remember, this is a non-weighted breadth calculation. So all the stocks in the XLY, so I can go in here in the XLY. I can look at all these instruments. I can get a breadth calculation here, all things considered with this. And what I did and noticed with the XLY on this daily time frame was, excuse me, on the weekly and daily time frame was, we basically were underperforming breadth-wise in a non-weighted fashion. I mean, Amazon's 12, 13% of this ETF. But this is one that really continues to, and I'm going to get to Apple, I promise. This is one that continues to kind of, in my opinion, any retracements now back up into that 77.67, you got to hit this on the short side, excuse me. So as we look at this now, we talked about ultimate targets with this are probably going to be around 72. I'm still standing by this, and I really like the way this thing is acting as a follow-through to the, as a corollary as we'll talk in math terms, to what I had talked about in the Bloomberg brief. So as we go into Apple, and I got an email about something I want to go over to for a guy that's in the den. This is from Albert. I'll go through this. This is the MMB, large mortgage-backed bond ETF. So we're going to hit that too. So Apple gapped down yesterday, rallied back up into that 104.29 general area, and we closed above on a weekly. So again, you've got some pretty serious headwinds for this stock between 104.29 and 106.29. And we talked about that. If we could kind of gap down and rally back up into there, we're right in the middle of that DMZ. So what do you do with Apple? Again, I don't know if the market's going to implode here down on the downside again. And Apple obviously is, a large part of the equation. It's like 3%, I believe, of the S&Ps, and maybe, let me get a definite for you here on the NASDAQ latest calculation. Let's see. Apple is 13.63% of the NASDAQ. So again, heavyweighted stock on some of these on the NASDAQ, and pretty high on the actually 14.60% is what I'm showing. Is that correct? 13 point, well, anyway, between 13 and 14, somewhere in that neighborhood. So as we're rallying back up into that, I mean, considering that the S&Ps might not implode, I think this will really lend credence to showing itself on Apple. We've come down a pretty good ways here. We traveled an entire, to the bottom of our fair auction on our weekly. But again, I'm looking at this as, maybe we consolidated down here, we gapped down, we rallied back up into it. I'm looking at this as a shorting opportunity on Apple, believe it or not. All right. COH. And then we're going to hit crude oil really quick. So Coach. All right. So Coach, obviously showing some relative strength here. This is the weekly on Coach. And we, again, looking at these inflection points, these are great demarcation lines. And I'm going to go back into our dashboard here, and I'm going to type up COH. On it. COH. I cannot type. Okay. So obviously this is the strong of the strong. I don't have to tell you guys that. It's in the XLY too. This is another thing. I mean, well, we'll go back to the XLY in a second. But here's these inflection points we were just talking about. And, what do you do with this now? So I think pre-market, what are we doing here? We're around 33.67. So the weekly, we've seen that. This is the daily. And, obviously this is not a stock to be shorting. And let me go back here. This is not a stock to be shorting, but the cool thing is going back in time, when we have these breaches and we have these retests, and obviously this is a break in the trend, and it's okay to be long, not okay to be short this stock. It's a relatively strong stock in a relative strength trading situation, and you've got now support at 32.77 on this most recent breakout, especially on a day like yesterday. This is, I'm not going to say it's a perfect scenario, and anything can happen, but this is a stock that showed itself, and the scanner would have, obviously picked this out on a day like yesterday. And yesterday, you kind of go in here, and let me just kind of show you how this works on a manual sort. You want to see things that are weekly, daily, just kind of sitting on the radar screen here. There's Coach. All right. So these are stocks that are bucking the downtrend yesterday and still staying above weekly and daily profiles. And if I wanted to go in here and say, okay, on the weekly, I want to see neutral, and I want to sort it. Oh, excuse me. I picked the wrong sort here. God dang it. Hold on. If I want to see stocks that are breaking out on a day like yesterday, again, these are kind of relying on daily prints, yesterday close, and I want to see stocks that have stayed to some degree in an uptrend on a long term, but still in the balanced area. I can still find opportunities, and I can go in here, and if I can go to breakouts, it really puts it easily on the radar screen by this formula. I'm going to talk about this a little bit when we come back, and I promise I'll hit crude oil and MMB. Right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Thanks for coming back. We're looking at breakouts on a day like yesterday. This is, again, not a lot of pre-market prints going on yet. A lot of the XLE stocks on here. So if I go back to the XLE, where's that? Wow. Top of the heap here on the daily. So 4 hour, 1 hour. The only green ETF, actually. So let's go into the XLE really quick and drilling down into those internals. Obviously, let's go back to the daily. Not a bad situation on the long side. So as we look at the XLE, we have a new weekly profile that's appeared this week. It's not exactly an exciting situation, just rallying off of these unfair lows into these unfair highs at 64.31. That doesn't have to happen. And I think we have to look at crude oil a little bit here to even start speaking on that matter. Pre-market, it looks like we're trading 36.85 on the Feb futures here. Again, kind of like XLE, you've got a profile here. You're sitting at the bottom. I really don't like the way this thing is being crowded here. It's not an exciting, hey, let's explore the whole auction type situation. Again, I mean, with this, the Saudi Arabian embassy getting basically torched, that should have, in my opinion, fundamentally rattled this a little bit more, and this is our daily on it. So XLE, you could take a shot down here on the long side, but again, I'd rather trade breakdowns on crude oil, which would probably warrant breakdowns on the XLE. So again, not a huge fan of picking a battle down here. We got a global slowdown going on in the midst of a price war on crude oil. It's just probably not the right time, if you guys know what I mean. Let's see here. All right, let's answer. Tucker had a question about the this situation on our dashboard. We looked at our S&P breadth calculations on the 240, and he was asking a question about this 109 number. So what this means is, in a nutshell, really, you've got a lot of orange bars sitting there on our 240 right now. And what does that mean on our charts? So that means that you've got a lot of new profiles thinking about printing and locking in right now. All right. That kind of started showing. We talked a little bit about this on the webinar. If this number's kind of getting past 12, 13, 14, I mean, this is kind of a market turning situation also. These 240s, remember, regulate a lot of times these long-term moves down or moves up. So you kind of use that as a stop. Breaking of those profiles is kind of the first sign. A lot of times when you're looking at an instrument, we always talk about using the 240s to regulate the trade up or down. When they start putting in new demand areas, quite a few of them, 109, that means that a lot of these breadth numbers are going to kind of convert over, because we're going to have new profiles, new balanced areas, and at bare minimum, that's a decent profit target situation when you start seeing that a lot. So again, a little bit of an innuendo to read into some more of the breadth information. Again, that just waiting for these charts to get straightened out here. No problem. Okay, so we looked at we want to look at MMB. So let's take a look at this, and this is from Albert, and I apologize not getting to this till now. He sent this a couple of days ago. Oh, it's an ETF. Is that the right symbol? MMB? Can somebody maybe look at that? I'm not exactly familiar with this. It's a large mortgage-backed bond ETF. Maybe somebody can give me some information on that. MBB. Okay. All right. He typed it in wrong. Sorry. Thanks, Basil. Basil, I'm sorry. I always say your name wrong. That's my fault. Okay. So the question is, it looks like Armageddon. Am I completely wrong? Or I hope I'm completely wrong. Well, I mean, even though we had a move down yesterday, and this is MBB. Yeah, I'm from the South, Basil. You have to give me some kind of, That's all. That's my eternal excuse. Whenever I get stuff wrong. So again, we're down below daily profiles. We rally back up into it, and again cannot hold. Kind of had a move yesterday up into that. This is really, actually, now that you mention it, this really doesn't look well at all. Rally back up into the balanced area, 107.89, and just kind of quickly got out of there. So right now, though. From a long-term standpoint, just because this is a great corollary to what Tucker had asked before. I've used that word twice today. This is a new profile attempting to appear on our weekly. Now, that is a profit-taking mechanism, period, on a long term. So is it time to get short based on this alone? No. Even though we're trading below profiles on weekly and daily, and this action yesterday didn't look very good, I would look at this as a relative strength. It's relatively strong in the past couple of days, no matter how you want to look at it. And you've got a new demand area happening on our weekly. So those 2 points alone on a long-term and intermediate, is it time to get short this? I would say absolutely not. That's the technical outlook. The fundamentals on this particular instrument, I'm not exactly well versed enough to put that into the equation while we talk on this show right now, but I will look into it. Good old General Lee had a bad day up in Gettysburg, though. Oof, that was an ugly one. Have you read any books on Stonewall Jackson, by the way? If you're into Robert E. Lee, I know if you're into Robert E. Lee, I'm sure you've read some books on Stonewall Jackson. That's very innovative, smart guy, for way ahead of his time, actually, in warfare. If you read some books on that, from what they say. Let's take a look at Netflix. I want to hit this one. This is always something. Ouch. This is always something that it's almost the barometer in some of my equations, or some of my conversations when we go to talking about pricing and subscription models and things like that. It's always like, well, we could go the Netflix model. The Netflix model is, it's so daggone cheap that you don't even really want to take the time to take it off your credit card. So we'll talk about that in the next segment, and we'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Thanks for coming back. We were looking at Netflix, and some of the, we obviously, everything kind of went to heck yesterday. But, in the again, this is a great example of this. In the breakdown that we had looked at with Netflix, we talked about the Netflix model. My one of my best friends in South Africa, he was going, he goes, you know what? It's on my card. I see it. I never use it, but it's not even worth the trouble of taking off my credit card. I mean, that's the Netflix model. It's just blisteringly cheap. But a lot of people watch things on Netflix. So, but he just kind of coined it perfectly. It's so daggone cheap that I don't even want to take the time to go in there and take it off my credit card. So. That being said, with zillions of people with Netflix subscriptions, right now, all we've done, and we talked about this in the long term, and remember, long term takes precedence over intermediate, short term. So we've come back into some support. We've had a kind of a weird day yesterday, but this unfair high around 109.19 now. We talked about, what do you do with Netflix? You definitely don't short it. This is, just on a long-term basis, if you're looking to buy this thing, you've got an opportunity right now. All right. It's acted, closed higher than it opened yesterday. This is our weekly bar. This is obviously our daily. This is, technically speaking, in a classical sense, this is not a bad reversal situation on a day like yesterday. So again, combined with that weekly unfair high, I think you got a decent little stake in the ground around 109 to orient some stops around now for guys who want to trade this. Now, the Cowboys out there that want to short things on their all-time highs, that's a dangerous game to play. There's some definitely reward in doing that, but strap your seatbelt in if you're going to play that game right now. This is turn the rents the same way on the long term. The long-term trend's still in force, and we had a decent little classical technical signal yesterday, in my opinion. And I'd love to hear Basil expound on Netflix today. And if you can, Basil, I will watch the show for sure, because I'd really like to know your comments on it too, if that's possible. We were talking about some Civil War situations, and that brings to mind, have you guys watched on, it might be on History Channel too, about Custer, kind of the life and times of General George Custer? Man, that's an interesting one. If you want to catch up on some more Civil War, if you could call them heroes, I don't know if it's go to if you go to historychannel.com, always go to TFNN.com first, by the way. But if you go to historychannel.com, you're going to see a way to really review a lot of different movie files on there on shows. It's really cool, actually. And you can stream it to your TV via all the latest gadgets and kick back and watch it. All right, so I think we covered a lot of things I wanted to cover today, but I want to go back to the scanner and just let you guys note here that if you want to find some stocks that held up in the bashing event yesterday, just click on some of these manual sorts. You can come in here, look at breakouts. These are the ones that we're showing. Diamond Offshore. Yep. Let's look at Diamond Offshore really quick. That was right off the scanner, custom breakout. Murphy Oil, Noble Energy. There's some great trades off of here. Diamond Offshore. So, again, we've been in kind of a defined downtrend for a lot of these stocks here, but getting our head back above on Diamond Offshore, back above 21.22. That's your support on this XLE stock right now. Even though the long-term We're still in a massive downtrend. You've got targets at 24 up top for that trade right now. Guys, stay tuned to TFNN all day. We'll be back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.